Don't sleep on this stock. NRG could be one of the best positioned utility plays for the next decade. NRG Energy Incorporated is proving that the utility sector isn't just for safe, slow-moving stocks anymore. While utility companies are traditionally seen as stable, dividend-yielding investments for conservative portfolios, NRG is breaking the mold with performance and growth metrics that rival high-flying tech names. For investors seeking a reliable stock with surprising upside potential, NRG deserves serious attention. NRG operates a diversified energy portfolio across the U.S., providing electricity and natural gas to over 6 million residential, commercial, and industrial customers in 24 states and parts of Canada. The company's structure is spread across 3 core regions: Texas, the East, and the West, ensuring geographic diversity and resilience. More importantly, NRG is positioning itself at the heart of one of the most explosive trends of the decade, the AI-driven surge in energy demand. What sets NRG apart in 2025 is its exceptional earnings performance and forward-looking strategy. In 2024, NRG reported a record-breaking adjusted EPS of $6.83, a massive 45% increase from 2023. It also posted its highest ever adjusted EBITDA and free cash flow before growth initiatives, clearly signaling operational excellence. These numbers weren't just a fluke, they were driven by real momentum: higher power and gas margins in the East and West, strong customer growth, and increased earnings from its smart home segment. Even Texas, one of its largest markets, delivered $150 million in additional earnings year over year, despite weather challenges and asset sales. The company isn't resting on its laurels. It's doubling down on the future of energy with bold strategic moves. NRG recently announced a major partnership with GE Vernova and Kiewit to accelerate the development of new natural gas power plants, a critical step as AI and data center demand begin to overwhelm current electricity infrastructure. In fact, NRG has secured multiple letters of intent with data center developers, firmly planting its flag in the ground as a go-to energy provider for this rapidly expanding digital economy. Looking forward, NRG is targeting at least 10% compound annual EPS growth through 2029. That's not just solid for a utility stock, it's outstanding. And there's more upside on the table. The company expects to develop 5.4 gigawatts of new capacity by 2032, with the infrastructure and flexibility to scale up to 15 gigawatts, if market conditions demand it. With tightening reserve margins across the U.S. and energy prices poised to rise, NRG is set up to benefit significantly from these broader trends. Wall Street agrees. NRG has an average analyst upside estimate of 17.29%, and it's a favorite among hedge funds with 53 top investment firms holding positions. Analysts and smart money are recognizing NRG for what it is, a well-managed utility company not just surviving the future but building it. In short, NRG Energy is rewriting the rulebook on what a utility stock can be. It offers the stability investors want in uncertain times, but with the growth and innovation usually reserved for the tech sector. As the AI revolution drives unprecedented power demand and the broader economy leans into digital transformation, NRG is perfectly positioned to ride the wave and reward its investors in the process. For anyone looking to add a utility stock that doesn't act like a sleepy dividend player, NRG Energy might be your high-powered, high-potential pick for 2025 and beyond.